Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menasce. This is the weekend edition where we interview notable people from the world of real estate investing. Today is no exception. We have a great guest all the way from Richmond, Virginia. Welcome to the show, Taylor Loht.
Hey, thanks so much for having me today, Victor.
Well, great to have you here. Well, Taylor, we've known each other a number of years and traveled together and met various parts of the country. But for the folks who don't know you yet, maybe give a little bit of your backstory and how you got to this point in your journey.
Absolutely. So I'm a real estate syndication investor today and raise capital for real estate syndications. Maybe we'll talk about that today. But originally got started, I wanted to get involved in real estate syndication. So I hired a coach and everything. But one of the other first things that I did was go to Real Estate Guys Secrets of Successful Syndication events all the way back in 2016. Where I originally saw you speaking on stage, and we had the opportunity to, have a conversation off stage, and it was great. It was a great opportunity to learn and meet people and build and grow. But the truth is, and what I was telling you before we started recording, is that even following that event, it took me a few years to get my first deal as a general partner on a real estate syndication. I started passively investing in everything to build my experience, build my knowledge base, but it still took time to learn how the business really works beyond what you can learn in a seminar, but on a tactical and strategic basis, and learn my best fit and everything. So yeah, it took a few years to do that first deal on the active side, an apartment deal. And, today I've raised capital. We've done over $200 million in acquisitions, and I, raised capital for those deals, and plenty going on moving into the future, and think things a banking crisis and everything that we have going on, this in spite of all of that, I think things look pretty bright for the future of commercial real estate, as long as you're doing it right. Absolutely.
Now, you've gone on and done something that a lot of folks, or very few folks, haven't done, and that's you've gotten a proper FINRA broker-dealer license. And explain a little bit why that's so important.
Yeah, absolutely. So when I first started getting acquainted with this business, I think I realized pretty quickly that I wanted my focus to be raising investor capital. That's just kind of what always attracted me. I love talking about investing with people, learning about what their needs are and everything. And that was just really what drove me. But as folks who are familiar with the rules and regs and securities laws will know, you can't get paid to raise capital unless you have securities licenses. It's pretty strict, pretty clear, not a lot of options. And there were an awful lot of people, and still are today, out there doing unregistered broker-dealer activity. And that really never sat well with me personally, especially, early on. I feel that if you want to grow a business, scale profitably, and frankly, sleep well at night, you should really do your best to behave ethically and in accordance with the laws and everything. So after a few years of looking and searching, and I general partnered on a couple of deals, but I really wanted to shift my focus to just raising capital, found the opportunity to join up with a boutique broker dealer. And really what that process entailed was a big part of that was taking securities exams. I do hold a few licenses, and my background is in engineering, so I have quite a bit of experience over the years of studying for exams and taking those, and that took a couple of months of studying and everything to complete that. And now today we've got plenty of deal flow, and I think one of my biggest takeaways from this process and this business is from this side looking in. I hate to say the outside looking in, but from the securities license side looking into just the world of real estate syndication with this lens, it's really interesting to me how much the syndication space just looks like the Wild West from this perspective. And I had been playing there previously, but now we have a lot more rules that we have to abide by from FINRA, not just the SEC, but also FINRA. That's where who issues the licenses and everything. But I think it's been good for us. It's been an effective way to scale in accordance with the laws. But there are rules that we have to play within, and hoops you have to jump through, if you will. But ultimately, I think if we do have a significant downturn in commercial real estate, some of those folks who have been acting as unregistered broker dealers, they might get in trouble, but we'll see.
I mean, there's no question there's segments of the market that are going to experience difficulty. I mean, we certainly know that the bond market has absolutely been hammered over the last year. Anyone who's financed an office building, a hotel, anything of that sort over the last 5 years with a CMBS loan that's going to be coming due, they're going to be paying a much, much higher rate, and they probably don't have the cash flow to afford that. So there's going to be a lot of distress in several segments. I mean, even Wall Street Journal, who are a little bit behind the times, have been reporting on it, in particular for the office space. And quite frankly, they're even underestimating the office vacancy rate. I mean, nationally, it's pushing 17, 18%, but in some markets, the downtown office vacancy rate's pushing 28 to 30%. And it's very hard for those businesses to stay afloat, especially if they're going to reset their interest rate from 3% to 6%. I don't know how they get there. So there's no question that we're going to be heading for some distress. That's clear. And that translates into opportunity for investors to acquire distressed assets, or maybe to be involved in a rescue of some sort for those types of assets that can be rescued. But now for you as a broker dealer, you've got to do your due diligence on every single one of these projects, because at the end of the day, you're putting your reputation on the line when you're bringing investors into a project. If you are not the general partner, how do you perform that due diligence? How do you know the general partner has done an adequate job of their due diligence?
Yeah, that's a great question, and I think it's more broadly, it's a question for anybody in this business to ask who's kind of hitching their wagon to an operator or a general partner. And our process is very detailed. I think it's important to note that we don't make investment recommendations to our investors. Ultimately, it's their decision, and that's that can be a fine line to walk, because people ask us our opinion about deals all the time, but we have to abstain and maintain that non-recommendation status. But anyway, so we look at our relationships with operators in terms of a long-term business relationship. So there's quite a lot of investment in terms of time and due diligence on the front end, just evaluating the operator to make sure that they have adequate business systems in place. They are First, they have good or non-criminal records. Do background checks on everybody on the general partnership team. Visit their offices. And this is our compliance people handle a lot of this. Visit their offices. Visit projects that they've done in the past to, frankly, make sure that these things exist. And one of the other kind of secret things that maybe people don't talk about is that when this is a very small business. If an operator is, let's say, unethical or just not performing well or making promises that they're not following up on, that word is going to get around. And, I think that's inextricably part of our process, even if it's not like a formal written down, thing. Word gets around if somebody's not performing, and that certainly factored into my decision-making process personally. We use also a third-party service that goes through the offering documents and underwriting and everything to check boxes. And that doesn't, we're not making guarantees about the deal or anything, but we do certainly appreciate that our reputation is on the line just as much as the operator's reputation is. And look, I invest my money in most of these deals as well. So, my reputation, my money, and it's all tied up in it. So, I think, to sum it up, think about the relationship with the sponsor as a long-term relationship. We plan on doing deals with these sponsors indefinitely, as long as they're doing deals, right? We're on the ride with our passive investors, whether that's in terms of investing our own money passively, but also we're sending out monthly or quarterly updates and reports. We're handling their questions and everything like that. So we're there for the long term. And I think there's also just the soft judgment aspect of this. What's somebody's reputation? What feeling do you get from having conversations with them? Are they really serious about the business? Are they bouncing around and doing one deal in, the Southeast one day, and then the next day they're trying to do a deal in the Southwest because they're kind of chasing where they think the yield is? Or are they very serious and invested in a particular strategy and maybe one or two particular markets, and really making sure that they're going to do their best to deliver on promises to investors? So there's a lot tied up into it, but I think coming at it with the mentality of this is a long-term relationship, everything stems from that.
So what is different, let's say, from the investor's perspective, engaging in a project through a broker-dealer versus, let's say, investing directly in a syndication, maybe a 506B or 506C syndication? What's different about that from even a procedural standpoint?
Sure, that's a good question. And I think the shortest answer to that is there's probably a lot less difference than you might expect. All of our deals fall under either 506B or 506C. Our investors invest directly with the sponsor. So the investor capital never touches my hands, doesn't flow through us at all. They invest directly with our operators. Really, the value add for our investors on our end is that we're doing that vetting on the front end. And, not to get too deep into it, but our comp comes from the general partner. As you know, there's an LP-GP split in any deal. The GP sees benefit in working with outside capital partners. Now, in our case, it's broker-dealer, but there are operators that like to work with fund operators as well, and fund-of-funds operators, and they'll generally provide an additional piece to the fund-of-fund operator to make sure that they can get paid. So for our investors, not a whole lot of difference. We just have to be a lot more. There's a lot more restraint on what we're able to say as far as the potential performance of a deal, the quality of a deal. As I said, we can't make investment recommendations or things that would be potentially construed as investment recommendations. I think when you're talking about like a Wild West aspect of how the regular syndication world looks versus what we are doing, we, I think, ask a lot more questions and qualify our investors probably quite a bit more than just an operator might do, or they might be required to do. We're making sure that deals, as far as we can tell, fit an investor's risk tolerance. For example, there are a lot more regulations on what we're required to do in terms of protecting the investor's interest and things like that. So really, it's the process of getting licensed and holding licenses from FINRA's perspective. Not that I can speak for them, but really the purpose is to protect the investor, right? This whole process is to do the best to protect their interests, and we do our best to act in that spirit and stick within the bounds that are provided. But there's, I think, probably not as much difference for our investors as one might think, really.
Fabulous. Well, Taylor, if folks want to connect, if they want to learn more, what's the best way?
So my company is NT Capital, ntcapitalgroup.com. If you'd like to have a conversation, there's contact forms and everything like that. As you know, and as your listeners probably know, relationships in real estate are so important. So happy to talk with any of your listeners and build a relationship and see if we can work together, or we can share knowledge or what have you. Happy to have a conversation.
Well, Taylor, I love the perspective. And for the listeners at home, definitely connect with Taylor Loht at ntcapitalgroup.com. The link will be in the show notes. And in the meantime, have an awesome rest of your weekend. Go make some great things happen. We'll talk to you again tomorrow.